Thank you for keeping faith with us. Thank you for staying here. You know, we're your home of independent, fearless, and credible journalism. Time now for us to get into our first big story. And more than 24 aid and campaign groups have called for international creditors to cancel a large portion of Ghana's debts as it struggles to contend with an economic crisis. Ghana's consumer inflation rose to a record 54% year-on-year in December, driven by rising fuel, utility, and food costs. International reserves have dwindled to less than 2 months of import cover from around 6 months thereabouts. Today we discuss these issues with Professor Godfred Bokpin. He's a lecturer at the University of Ghana Business School. We also have Dr. Josh Bamfo, partner and head of Transfer Pricing and Economic Advisory Services, Anderson, Nigeria. Both of them join us for a conversation. But before we get to our guests, way to Lanza.
Hello.
Is
morning.
here looking all gorgeous, colorful.
You're
adding color to my drabness this Monday.
No. I was just trying to complement the shades of blue.
It's a blue morning.
Yes.
Not in a bad way.
Yeah, you're not in a bad way. But we'll be fine. I mean, you can just get a sense that I'm sounding a bit nasal, but I'm fine apart from that.
Should I get on your case in respect of your hair?
No, don't.
It's looking beautiful, but some of us wanted to keep the natural.
I've still got the natural.
It's still natural, but
it's still natural.
Something has changed.
I've actually not permed it. It's a silk press, so don't be alarmed.
It's a what?
Silk press.
I heard you talk about that in
the makeup.
The makeup, silk press. You will talk about that behind closed doors. But thank you, Dr. Bamfo, for joining the conversation. Thank you, Professor Bokpin, for joining the conversation.
Thank you very much.
We're grateful for your time. Let's...
Bamfo and your listeners.
Right. So we have Professor Bokpin on the phone and Dr. Bamfo on Zoom. Let me start with you, Professor Bokpin. We've heard so much commentary on this debt exchange and how we're handling it. I saw recently from Kofi Bento talking about how Jamaica handled it. 30 months is what they took, convincing people, jaw-jawing with the people. In other parts, 18 months and the rest. We want to do it in such a short period of time with all the baggage. I have also seen, just to set the tone for the conversation, you look at the likes of Joe Jackson. He posted recently on Twitter, and this is what he says. He says, bonds maturing in 2023 will receive the first principal repayment of 15% in 2027. Final payment of 14% in 2033. Spreading the principal over 10 years is a haircut. Are we getting the approach to this debt exchange right? And if not, where exactly do we find ourselves now?
Okay, Sam, thank you very much. Let me start off by saying that we all agree, or largely, that Ghana's debt is unsustainable. That meant that a certain level of debt restructuring is unavoidable. However, the approach, first, the strategy, second, the content of the debt exchange makes it problematic and less desirable. And the reason we are unable to support the government in this scenario. We are not against debt restructuring. No, that is not where we are coming from. The manner in which government is operationalizing the debt exchange is highly insensitive and may create, in fact, the unintended consequences may more than offset the gains that we hope to make by enforcing this debt exchange. So it has more to do with the approach and the strategy government has adopted. That is why the pushback has been very strong. And I support the pushback. As I've said before, that no reasonable person would sign onto the debt exchange in its current form. It is possible that people would have signed earlier simply because they didn't understand. And if you remember, from December 5th, when it was announced, well, the interest it generated wasn't that much because the exclusion of individual bondholders meant that it was a bit easier dealing with participating financial institutions. But we started raising alarm that, no, this was going to affect the financial sector overall, and that if you look at the pass-through effect in the banking industry in terms of impairment losses consistent with IFRS 9, and then you look at the liquidity constraint because of zero coupon payment in 2023 and the staggered coupon payment thereafter. It was the liquidity gap alone was for 2023 will be more than 15 billion in the banking sector alone, and that will constrain lending to private sector. And then if you look at the impact on the capital adequacy ratio of the bank, some of the banks, majority of them local banks, would actually be recording negative capital adequacy ratio. The interpretation of negative capital adequacy ratio is technical failure. It means that those banks have technically failed. So it has more to, if you ask me, it has more to do with the approach. And as you rightly said, everywhere that this kind of restructuring has been undertaken, they were done in a certain way that allowed everybody to adjust. The adjustment process through the household balance sheet, private sector balance sheet, is very, very important. But here, so if you look at the case of Zambia, okay, the negotiation has taken so long, and it hasn't even been concluded. If you look at the case of Jamaica and the rest of them, but here you find one government in a certain African country that announced a debt exchange on December 5th and gave a deadline of December 19th. You could only do that if it was your own money. Even if it was your own money, you were going to be very careful that you do it in such a way that households are able to adjust. It was so sudden. And then also, of course, the pushback, the extension, and all of that. So to conclude on that particular question, this is where I stand.
But Prof, you cite the situation in Zambia, for example, but there are those who argue that this government doesn't have the luxury of time, really. It needs to help us get out of this mess as soon as possible. And so there are those who try to justify government's posturing by saying that they may not be the same scenarios.
No. You know what? That is a wrong understanding of how the IMF works. When the IMF reached staff-level agreement with the government, they were very clear that there were certain prior actions that needed to be met before the staff-level agreement will go through management approval and the board approval. In fact, one of the prior actions, hello?
I can hear you, Prof.
Yeah, one of the prior actions was fulfilled just last week. One of the prior actions was actually the audit of the COVID-19 expenditure. So you can see that report is out now. You know why? Because the IMF insisted. Because if you remember, Parliament has been asking for the audit of COVID-19 expenditure, okay, instigated by the minority in Parliament, but the government has said no. But thankfully, and that is why we often say that, look, it's good for the IMF to be in town, because when they are in town, some government becomes a bit more accountable than when, more accountable to the IMF and the World Bank than their own citizens. So as you can see right now, on the insistence of the IMF, government had to oblige to the audit of the COVID-19 expenditure. The results of that is what was published last week. So whilst we are all seeing the gaps in how payments were made for vaccine that never got delivered, COVID expenditure that were actually rechanneled to budget support, it's difficult to find where that is and the rest of them. I think the credit now can go to the IMF for insisting on this. The other prior action, and I have been very critical of the IMF, but I think at this level, we can commend them because this is something that we had asked for ourselves and our government never respected us. But now with the IMF, and given that the government needed an IMF program, they agreed, right? Now, that said, the IMF then said that Ghana government needs to take steps to comprehensively restructure its debt. They need assurance from our creditors and then financiers that they are on board in restructuring our debt. The IMF is not insisting that the government must restructure its debt within this shortest possible time and achieve 100% success before the program will be approved. It's about presenting a credible plan backed by the assurance of creditors and financiers that they are on board. You have secured their commitment in restructuring on your debt. That may be enough for the fund to approve the program. In the case of Zambia, they reached staff level agreement somewhere December 2021. And when they initiated the process of restructuring their debt, that was enough. And the fund approved their program in July. And up to now, they are still going through the process of restructuring while the IMF program is running.
So, Prof, basically what you're saying is our approach is faulty.
Yes, it has more to do with the approach and a certain appetite on the part of government to abuse the process and create financial repression in the economy. And that is where the focus should be. In as much as we support government in restructuring its debt, the approach, the scope, and the terms of the current debt exchange is certainly cannot be supported and cannot be justified on any serious ground.
Later, we'll come to you on what that latest Auditor General's report evinces when it comes to COVID-19 spending, the money involved. We'll come to you on that later. But let me go to Dr. Bamfo. On that same trajectory, especially as your economic advisory services are part of your forte, if you look at our system and what goes into what we're doing, debt cancellation, as Professor Bokpin was speaking of, in terms of the Paris Club, the best they can do for us is the least of our worries. In terms of our bilateral debt, and we all know the different dynamics, bilateral debts, commercial debts, all of that. Our bilateral debt is just about 4%, and 3% of that is what we service, or 3% of what we pay to service the debt. The bulk of it is commercial, and this is debt owed our investors and private individuals. That's on another leg. And then we have the debts to the World Bank, all those other entities, African Development Bank, Afrexim Bank, all those facilities we've taken. They are all in there. But especially when you look at the dynamics, do we have to have this sort of haircut, this sort of terrorizing, so to speak, debt exchange program that we're seeing?
Yeah, thank you very much. I think what is important is to have some agreement with our creditors before the board of the IMF can actually approve this M3 billion facility. And to do that, I think it's important that first and foremost, you engage some of these key nations that are creditors to us. In as much as the proportion of the debt that we have with these nations are much smaller, even with the commercial creditors, where we can actually have leverage with them is to have the support of these nations, because some of these commercial creditors are actually citizens of these nations. And the way these guys have leverage over us is for some of these powerful nations, which could be trading partners, impose some penalties, either through high export taxes when we export to their countries and all that, should we clearly default on payment of such loans. So having their buy-in is going to be very critical. So the debate that is out there is whether to engage these bilateral nations, either through the Paris Club and big credit nations such as China, which I think we owe around $1.7 billion. Do we engage them directly, or do we go through the G20 Common Framework platform, where hopefully we can get the support of the G20 countries? And that has been a big debate. Now, proponents of those who want a direct engagement believe that that could lead to a faster resolution because you are engaging them directly. Those who are for the G20 believe that with the G20's backing, we could have more effective results. On the other hand, if you look at the track record of the three nations that have gone through this G20 Common Framework and program, we've not had very stellar results in terms of the rapid pace of resolutions. We've already talked about Zambia's case. I think Chad has been able to get something out of that process, but Ethiopia has not had a success story, in part because of the civil war. So we really don't have, a lot to really hang our hats on in terms of rapid resolution going through the G20 Common Framework. But that notwithstanding, I think it's very critical that we get some form of resolution to then enable the board to actually sign off. And I think that is where the time sensitiveness of this whole process comes in. So as much as I agree with Prof that, look, all we need to present is something that is credible, for the board to approve the facility, which is extremely needed, then later we can actually continue with the implementation of that particular credible plan. But even to present a credible plan, you really need, these creditors having a committee agreeing to whatever is being proposed. And I think whether it's, a debt cancellation that some of these action aid groups are calling for, or some restructuring of our debt involving some, haircuts and extension of debt payment into the future, will be necessary to give us that fiscal space, to actually embark on a process of growing the economy back again, and therefore being debt sustainable on a going forward basis. So I fully agree that this engagement is going to be very important, whether we go through the G20 Common Framework process or we engage directly with either the Paris Club and other major bilateral national creditors. It's going to be very important to also help us deal with the commercial folks, who will never have an incentive to cancel our debt because everyone is in business to actually generate more returns. So they will not have an incentive to actually cancel our debt unless we get the support of these major nations.
And so the big question is that what impact will this make, like you've said, if these private investors or lenders say we are not interested, and like Benjamin mentioned, these other debts, which just form 3% of our total debt, what impact are we looking for? And is this even anything worth pursuing?
I think we don't have a choice because going forward, we'll still need this market, the capital markets, at some point in the future. Today, based on the downgrading of our sovereign credit rating by the independent credit rating agencies like Fitch and Moody's and S&P, we don't really have access to the international capital markets. But I believe that in the medium term, we still might have a need to go to that market. So it's important that we negotiate something that is perceived to be win-win for both parties. So to deal with these private, investors, I think it's important that we have the backing of the powerful G20 nation. If we should go through the common framework, or have the backing of some of these bilateral countries that have been creditors, in the past, knowing perfectly well that should we get our act together and the economy bounces back, they would tend to actually receive their returns sometime in the future. So I think it's how we articulate the case so that there's a perception of a win-win for both parties. But to go there and just ask for debt cancellation will be a stretch, and I don't believe any of these private creditors will buy that.
Professor Pokping, while appealing for a debt cancellation, these aid groups also made a very interesting statement, and I would like to find out if you agree with them. They say wealthy private lenders must share in the cost of a crisis they helped to create and cancel the debt. Do you agree with this?
That's an interesting question. There is conventional wisdom in pushing for that position because of the excess premium that mostly poor countries, majority of them in Africa, have to pay by accessing capital from the same market that U.S. others also go to. So if you look at the yield over a certain period of time, you will see a certain portion that cannot be explained merely by economic fundamentals and is simply attributable to what we call the African risk premium. And therefore, there is this belief that some portion of African debt or poor countries are a bit unjust, and the higher yields have benefited worthy creditors or lenders, mostly from the global north. It didn't start today. Hello?
We can hear you, Prof.
Yes, it didn't start today. If you remember, from the early 2000s, the Jubilee campaign, okay, which now has been renamed Debt Justice. They started this same campaign also, and they were successful. Their campaign actually led to the IMF World Bank inspired EPIC and multilateral debt relief initiative, which contributed to over $100 billion of debt that were canceled for 35 poor countries, majority of them in Africa. So they have been in the system, and their goal now is to end debt on injustice. Now, in the case of Zambia, we also saw them pushing strongly, and in fact, in the case of Zambia, there were over 100 economists and development experts who signed a petition, particularly urging one of the global lenders to a lot of African countries in the name of BlackRock. And according to Debt Justice, BlackRock was going to make a profit in excess of 110% if Zambia had been able to honor its debt obligation. Now, you also see that when government announced the restructuring arrangement, particularly with the Eurobonds, the international creditors, the private commercial ones, had quickly formed a committee. And when I checked the composition of the committee, BlackRock was in there as well. That immediately sent a signal that it wasn't going to be easy for Ghana to restructure Eurobonds, because with the presence of these international lenders, global lenders, in fact, others had even called them predatory lenders, right?
Interesting.
So because they were essentially milking the continent in terms of the excess profit that they were making, and therefore that also meant that they were taking risk. And if the risk has crystallized now, then they must also be prepared to have a deeper haircut in order to free up space for this. Mostly their justifications have come from the fact that the debt overhang would affect the poor and worsen inequality. So if you check the international aid, those who are pushing in the case of Ghana, they have implicit concern about poverty reduction, inequality, inclusive growth, because this debt-induced macroeconomic instability would affect the vulnerable more, and that any step in restructuring or in restoring macroeconomic stability will come at a great cost that would disproportionately affect the poor, the marginalized, the socially excluded. And for that reason, they are pushing for this. Yes, and I'll put it this way. If you look at where Ghana's debt is right now, in fact, in present value terms, it's more than 100% of GDP. Now, and the government, based on IMF framework, intends to restore debt to a sustainable level by 2028. Do you know something? That is almost impossible. I'm saying it's almost impossible because if your debt in present value terms to GDP is more than 100%, and you want to reduce it to 55% in 5 years, that may require you recording a primary surplus of not less than 12% of GDP. Look, a primary surplus of 12% of GDP, the economy cannot bear it. Look, there's no country, a low-income developing country, that has even been able to achieve a primary surplus of 5% of GDP consistently. No. Then if you look at the 2023 budget, the primary surplus, even with the budget latent with austerity that we are complaining, the primary surplus the budget is hoping to deliver in 2023 is just 0.7% of GDP. And we are looking at doing, for the next 5 years, more than 12%. In the next 3 years, as the projections were given in the 2023 budget, up to 2026, government is only hoping to contribute through fiscal adjustment to debt restructuring by only recording a primary surplus of 1.3% of GDP. And when you should be doing no less than 12%. And that is why you see that because the fiscal side is doing so small, they want to load a bigger portion of that fiscal savings to debt operation. And that is why government announced a debt operation that can only exist in theory and not in practice. Right?
A quick follow-up to that. We'll be looking at some of the concerns that these groupings have raised. But I'd like to find out from both of you, gentlemen. I'll start with you, Professor Bokpin. Is government itself taking a proper haircut in terms of its spending? And there are 4 issues I want to run by you. The Finance Minister, Ken Ofori-Atta, says government is cutting spending to the bone. It means they are cutting through the flesh right to the bone of spending. But here are some other dynamics to take stock of. We have a 2023 budget that has about 61.4 billion in terms of deficit. How are we going to get that money? Again, we're now told we'll even be borrowing to continue work on the National Cathedral after Parliament jettisoned that 18 million Ghana cedi proposal. When you look at all of these, and then to borrow Senor Josi's words, when you're broke, you don't move from drinking beer to drinking champagne. How is it going to work? Has government itself shown enough commitment?
Okay, if I may come in before my other colleagues.
Yes, I said you should start, actually.
Yes, I think that is where the problem is. And that is why the resistance from domestic creditors has intensified. Because government, the moral hazard of it is such that domestic commercial creditors cannot accept the debt estate because the government hasn't demonstrated its own commitment to burden sharing. So while government talks more about burden sharing, they do less. And you can see that in the budget you just mentioned. You can see the same government that claims needs to cut expenditure. Expenditure has actually gone up significantly in the 2023 budget compared to 2022. We have not seen any steps from government to downsize the size of government in a debt-induced macroeconomic instability like this. The least government can do is to show lean government as a way of courting creditors to the table. But government hasn't done that. So government hasn't shown enough commitment to burden sharing, and therefore you don't have the moral right actually to ask creditors to come and participate in the burden sharing. That said, the other bit that is of a concern and why some economists do not agree with the debt cancellation campaign by Action Aid, Oxfam, Debt Justice, and the rest of them, is that while governments go take this expensive debt from the international capital market, from BlackRock and the others, they actually don't invest them in the productive sectors of the economy that would benefit the poor. Oftentimes, these expensive debts are used to fund consumption with implicit corruption. Okay? And therefore, when we take this debt, we are unable to use it to enhance the cash flow generating capacity of the economy, and therefore the economic crashes.
Right.
Of course, the interest rate at which you borrow has implications for productivity growth, whether at the private sector level or at the public sector level. But in the case of Ghana and many other African countries, there's so much abuse of borrowed funds, and therefore we have very little to show for it. And that is why they think that the idea of debt cancellation should not be an agenda item, maybe probably an AOB. But
Okay.
if you look at the effect of the debt-induced macroeconomic instability on the poor, inequality, the marginalized, and the socially excluded, then these international development organizations with particular focus on ending poverty, reducing inequality, then they tend to highlight that, yes, if we could throw the baby away with the dirty water, if we look at it, that government should be punished. Because on the average, government doesn't get punished. As we can see in the case of Ghana, government is not showing much burden sharing, and they are pushing disproportionately the burden sharing to creditors, even including pensioners.
Right.
Can you imagine?
Right. And that brings me to the very next leg of my question, which I will address to Dr. Bamfo. Do you agree with what Professor Bokpin is saying? And is it that government is given a haircut, but it's retaining its afro and it's choosing the easy way out? What's your take?
All right. Clearly, I think it's extremely important that government appears to be taking its fair share of the burden, because there's no way we can get out of this mess without everybody playing a role in terms of the burden sharing. And I think it's incumbent upon them to demonstrate that to the public before they make demands on the public to take a portion of these burdens. So I fully agree that a lot has to be done. I mean, at the end of the day, the devil is in the detail as to whether it's going to mean a leaner government, or it's going to mean throwing out some, key projects that when things were normal, they intended to do, but now they might have to give them up. Obviously, you need to look at value for money analysis to see, is it worth giving it up, or is it worth continuing with such projects? But by and large, I think it's very important that government appears to be significantly bearing a portion of the burden and actually bearing it, in its reality. Now, in terms of, what Action Aid is trying to do and our push for debt cancellation, and their push for debt cancellation, I agree with Prof that if you look at it from the perspective of helping the poor and mitigating, unintended, significant income inequality challenges, then it's a good cause. As to whether it's going to be successful or not, we really don't know. But it's important that we have these, groups, pressure groups, putting pressure on, bilateral creditors and the commercial, investors to actually do something about our debt situation. Finally, I think it's important that we recognize that as a nation, we really need to look at some of these issues historically. When we got the debt cancellation under HIPC, between 2001 and 2006, what happened was that we had enough, fiscal space to have embarked on some major capital investment that will yield returns and therefore put us on a high sustained economic growth rate over years to really bring people out of poverty to high earning incomes. But what happened was that we started borrowing more from the private sector. Our first Eurobond was in 2007. And since then, we've visited that market 16 times, which means that should we even enjoy the cancellation of debt, this behavior of continuing to borrow, from the private, creditors has to stop, because should we get into this situation, we know that it's very difficult to get any form of relief from the private, creditors, because they are in business to maximize their returns.
And it's even interesting, just to chip in, as you speak now, you remember on the HIPC, we got so much, the concessions that were made to us, billions that were wiped off our debt burden. It appears we are happy, very happy, to get to this point, and then after begging for loans, beg as well to, have forgiveness. I mean, when is the cycle going to end?
So that is the problem. That's a cycle. You cannot get a debt cancellation and, after a couple of decades, you are back begging for another debt cancellation. So I think there should be a change in mindset. It's important that we, have all these infrastructure developments, but they need to be done in such a way that there's clear value for money. They can actually lead to a generation of, income across board, so that it can pay for itself. But it cannot be a case whereby we spend on some of these projects, some could be inflated, and then years down the line, we can't even afford, to pay our creditors. So a bit of this, the problem, we need to admit that our governments have not done great in the past, and this is not one particular government. And we need to strategically think about how we can actually continue to provide all these infrastructural developments, create an enabling environment for businesses to thrive, but do it in a manner that we can actually afford and have sustainable debt going forward.
Let me take your perspective on the latest Auditor General's report and how much we are unable to account for in terms of our COVID-19 expenditure and the potential of that hampering further government's drive to secure a debt exchange program. We know the bondholders say they cite many reasons why they're not interested in participating in the program. And then we are hit with this as well. How do you think this feeds into the whole drive by government? Let me start with you, Mr. Bamfo, and then Professor Bokpin can share his thoughts as well.
Yeah, I think on the domestic side of things, because the whole arrangement is voluntary, all right, it's important that you build some level of credibility or trust, with the investment community in terms of sharing that burden. And part of the process of building credibility and trust is transparency. It cannot be the case that you are asking them to do so much without being transparent in terms of expenditures and how we got here. So I think that that level of transparency is going to be very critical on the part of the government for them to actually build some level of credibility with the various stakeholders that are supposed to voluntarily come in for these debt exchanges to push the maturity of those debts into the future and the payment of those interest payments into the future. So for me, I think where it comes to play is the ability to build credibility and trust so that, the stakeholders will be willing to voluntarily participate in this debt exchange program. If not, it's going to be very difficult for the government to actually implement this.
Prof.
Yes, thank you very much. I associate with the comments of Dr. Bamfo. The timing of the report makes matters a bit complex for government, but that is what governance is all about. As I said, since COVID came, of course, in crisis moments, procurement infractions, integrity violations tend to be very high. And because government will always use urgency, speed, and all of that to sidestep important accountability measures. So when COVID came, the discussion globally was that keep spending to save life and livelihood, but keep the receipts. That meant that whilst you were on the go in saving lives and livelihood, perhaps procurement processes may delay, and therefore we are likely, or governments are likely to violate the procurement integrity measures, but keep the receipt. After that, in Ghana, reasonable people have been pushing for the audit of COVID-19 expenditure. And the reason was that whilst government was blaming everything that was happening in this country on COVID-19 and the Russia-Ukraine war, the view had been that Ghana actually made profit from the virus. And the reason that view is very strong is that if you look at COVID-19 related inflows, Bank of Ghana gave the government 10 billion cedis. Whilst we were in COVID-19 lockdown, before the lights came on, government had taken $1 billion from the IMF in the form of rapid credit facility. We got support from the EU. In fact, there were some World Bank projects running that they changed their nature to make those cash flows immediately spendable to support government fight against COVID-19. So if you look at the COVID-related inflows and even the COVID expenditure that the government presented to Parliament after the minority in Parliament, was it last year or so, threatened that they were not going to whatever until the minister comes to present a brief parliament on COVID-related expenditure, you could see that there was a gap of about 8 billion. There was a gap of about 8 billion cedis that could not be accounted for in the COVID expenditure that the government presented to, the Minister of Finance presented to Parliament. And therefore the question was, where is this excess money? Because we spend lesser than how much we got in the name of the virus. Now, and there was a whole lot of discussion around that. And the audit that should have been done actually didn't take place. Now with the IMF, when government made a call to the IMF, that also strengthened the bargaining power of civil societies and academics. And therefore, probably the IMF also seeing that there is a need for the government to be a bit more transparent, because the IMF had seen what was going to come and would have wished that government would be a bit more transparent. So those thorny issues that could be a stumbling block to even generating acceptability of the IMF program, they were also mindful in trying to make sure that government addresses those concerns. So the IMF made the audit of COVID-19 a prior action, and the result is what we are also discussing right now. Even there, you can see the infractions. You can see the infractions. So the lack of value for money, COVID vaccines that had been paid for that were not delivered, and some COVID-related inflows that were rather channeled to general budget support and the rest of the. Why was that so? Because COVID also happened in the year of election. So government was abusing the public finance in the name of COVID-19. In the name of COVID-19. So
Prof, just a little bit. You're saying government was abusing public financing, or the public purse, basically, in the name of COVID-19?
The public purse.
What do you mean? Can you break it down?
What I mean is that they took advantage of the COVID and overspent. And our fiscal deficit went, in fact, Ghana's fiscal deficit in 2020 was the highest in the sub-region. So whilst other countries were doing less than 8%, Ghana's fiscal deficit in 2020 was more than 15% of GDP. Okay, so the current crisis we have here, you can also trace it to the election-related excesses of 2020 that government blamed on COVID. This is what has brought us here. And you realize that, fine, to make matters simple, and because of the pandemic nature of the Parliament suspended the Fiscal Responsibility Act in 2020.
Right,
that opened the floodgate for government to spend. But of course, even before 2020, government never respected the 5% threshold imposed in the Fiscal Responsibility Act, because they treated COVID-19, they treated energy sector indebtedness and financial sector cleanup as below the line.
When it comes to the issue of going to the IMF, this government has been bashed for not being proactive during the time where experts like yourself had said it was important that we go to the IMF as soon as possible. Government was saying there was no need, and in fact, the finance minister stated emphatically that we were not going to go to the IMF. Once again, we find ourselves in a situation where there are many calls for government to cut down its size and expenditure in the budget. Government is dragging its feet, hoping that the debt restructuring program will be successful so that it can present good books for the IMF board approval. The Christian Council is asking, scrap this deadline or suspend the deadline for the debt restructuring program. Already we've seen about 3 postponements to the deadline. Would you say here again, government is delaying a decision that it will have to take eventually, and once it delays it, it will further compound our problems?
Precisely. Look, you made the right point. Government unwillingness to go to the IMF could also be explained by the fact that the IMF will shine light in every dark spot of our public finance. So you can see that one immediate effect of government making the call to the IMF is the audit of COVID-19. As you can see now, you can see the embarrassment that is bringing to government. I'm not saying an embarrassment as in a negative sense, but you can see the revelations in the report. The country that needs money to sustain pre-senior high school could pay over $80 million for vaccine, and up to today, it hasn't been delivered. So that was one. Then the other thing also was that until the IMF came to town, Ghana's public debt was a matter of multiple choice. Choose the one that you like. The government kept telling us one debt to GDP ratio, whilst analysts were of the view that our debt to GDP ratio was far higher than what Bank of Ghana was reporting, than what Ministry of Finance was reporting. Look, towards the end of 2021, Bank of Ghana was reporting a deficit of less than 80%. In the middle of 2022, we were reporting a deficit of around 76.6% of GDP. When the IMF came into town with their debt sustainability framework, we were then told that our debt to GDP ratio was actually more than 100%, because the debt accounting mechanism excluded state-owned debt that were treated as off-balance sheet in the central government debt accounting system. Meanwhile, the burden of those debts were actually on the same state. So you see that with the debt sustainability framework, they then roped in cocoa board loans, Datin, Ursula, and the rest of them, put all of them. In fact, even the debt sustainability that the IMF did excluded certain arrears to contractors. We'll talk about that one some other day. So now, and with all the back and forth, government was living in denial that our debt was unsustainable, right? And we kept telling them that, no, your debt is actually unsustainable and all of that. So guess what? Then in the 2023 budget presentation, government officially gave its blessing to what they had considered rumor and doom prophecy, that our debt was unsustainable. The present value of our debt to GDP ratio was more than 100%. We had breached all the debt sustainability indicators.
Right.
We're trending far above the policy dependency threshold and the baseline estimation. Now, here we are. The other point you talked about on the expenditure cut.
So briefly on that, Prof, just briefly on that next point.
Yes. You know, the earlier government takes those steps, the better. Because where we are now, we cannot support creditors to come on board the debt exchange without government doing that. Other than that, they will get away with the murder. Now, my other concern, whilst I've said that, is that any further delay in having some kind of credible plan with the buy-in of creditors would affect the staff level agreement. Because remember, the staff level agreement, 1 month is gone. All the projections in the staff level agreement are as valid as assumptions underlining those projections. And some of those assumptions may not hold for that long. So if it delays, then it means that there might be a need for a recalibration, an adjustment in the staff level agreement before it goes to the IMF Executive Board. But it is government that requested for an IMF program. It was not domestic creditors. So the government that requested for an IMF program must do more to ensure that the program is approved on time. And it could not blame mere mortals, ordinary Ghanaians who have invested 500 or whatever for the delay in the program. And that is why I agree with you that government must demonstrate greater commitment to austerity and cut expenditure in these hard times, so that in good times, if government wants to have 1,000 ministers in good times because we can pay, that is fine. But in bad times, in crisis moment like this, you cannot have that government, size of government, and come and ask creditors to trade off their consumption.
Right. Let me bring in Dr. Bamfo at this point in time. So you look again at COVID-19 expenditure, and like Professor Bokpin has said, we had a glorious golden opportunity to do quite a lot with that, but did we? So you look at the 2.5 billion, that's the equivalent of about 21 billion Ghana cedis that was secured, and only a quarter of that, about 25%, went directly into COVID spending. So I'm talking about health, social relief, security issues created by COVID. A majority of the sum of money actually went into items like free SHS, LEAP, etc., which were not on the radar. Then again, you look at the fact that a paltry 3.5% of spending went through government's own accounting system, that is GIFMIS. The question is why? We said we were giving out free electricity and water at a cost of $250 million. About 50 million of that is still outstanding and paid. That's the equivalent of about 600 million Ghana cedis. Then finally, we said that we're going to purchase vaccines. $80 million was paid in advance. No vaccines. When you look at all of these, the supply of hot food and all of that, what picture does it paint? And again, for me, I reiterate, if we don't plug some of these loopholes and the things we keep seeing in the Auditor General's report, we can borrow. It's like pouring the entire Pacific into a basket with holes. You can pour the Pacific in there and it will still be empty. Your take?
Yeah. So I fully agree that it's important that government is accountable and is very transparent about how they, spent some of these inflows that came in during the COVID period. However, what we need to bear in mind is that during the COVID period, clearly government's projected revenues were nowhere to be met because you had a lockdown. That meant that the economy almost ground to a halt. Economic activities, were on the downside. So you wouldn't expect tax revenues to meet your budgeted revenues that you had prior to the commencement of COVID-19. So without decrease in tax revenues, even though there were these inflows, I want to believe that there were some expenditures that they found necessary that they needed to spend on.
Which they could have been more transparent about, right?
Exactly.
I mean, if you're going to use it, just let the people know this money was initially, we're given this money for this, but we're going to, sometimes it's almost as though we were irrational in Ghana that the people wouldn't understand and that only leadership at that ivory tower can understand.
I think for me, that has always been something that I think governments, especially in Africa, need to really stress on. You see that in the private sector, transparency is key for credibility, and credibility is key for doing business with stakeholders, because you need trust. All right. So yes, there could be a reasonable basis for you to have used those funds to spend on other activities or programs that were not directly related to COVID-19, but you can actually explain why, and people will understand you for doing that. But sometimes we go ahead and have these kind of expenditures, and it's only after the fact that this type of audit reports then exposes some of these expenditures and leads to more questions than answers. So I fully agree that it's important that government is able to explain why they made those expenditures when they weren't directly related to the COVID-19 challenges. But that said, I fully agree with Prof that look, the level of credibility that the government needs in order to be able to actually execute this debt exchange program for the domestic side of things, and also to deal with our foreign creditors, is going to be very important, because without that we don't get this IMF bailout, and if we don't have this IMF bailout, we're going to really struggle to turn this crisis around. So anything that they need to do to actually bring about trust and credibility to actually move this forward and get the approval from the board of the IMF is going to be very critical. So I share the same sentiments that it's important that government look at some of these expenditures and be able to come to the public and tell them, look, we are going to make some tough decisions. And the earlier we make those decisions, the better. The timing of decision making is as critical as the decision that you actually make. Sometimes when those decision making is delayed, then it might not have the right results if you had made it timely. So my view will be for government to actually first and foremost be more transparent, explain the nature of those expenditures and why they made them, and also build credibility in this process and ensure that this program becomes win-win for all stakeholders. We all have to buckle up for now, because when things turn around, we are going to be beneficiaries in the future.
So as we get ready to wind down on this conversation, my final bit goes back to the domestic debt exchange and how it's been dealt with in our particular case. We have a context, but what does the law say? When you look at today's daily graphic, it says ensuring success of debt exchange program, and this is the banner headline: engagement, cooperation, way to go. That's according to the Attorney General and Minister of Justice. He is calling for engagement, cooperation. But in terms of the legal elements, and this is for both of you for reflection, we've seen the cocoa bills rolled over without those who had contracted those bills or subscribed to those bills giving their consent. That, in terms of the market, is a no-no. For some people, the amount was paid into their accounts, and the following day, it was taken. For some, they withdrew them when it came through, and they've now been told to return them, which is interesting. Now, let's look at what the Attorney General says. Explaining the basis for his legal opinion on the DDEP, the AG said the bonds were contracts between the government and the bondholders, and therefore any variation, that is changes, of their terms by a party without the consent of the other party, that is the bondholders, would constitute a breach of contract. That is point one. Again, sourcing the Fiscal Responsibility Act 2018, Act 982, allowed the Minister of Finance to take measures to ensure fiscal discipline. But such measures, per the law, did not include a variation, alteration, or restructuring of bonds. In dealing with this entire situation, have we handled it well in respect of even the very laws the government is supposed to be operating by? I'll start with you, Professor Bokpin.
All right, thank you very much. As you rightly said, I am not a lawyer, so my view will be informed largely by my profession. My deepest concern with the approach government is adopting is how government is distorting the mechanism of our financial market, and therefore undermining confidence in the financial market. Can you imagine that cocoa bill matured and government just decided to do what they did? You know, I'm afraid maybe government, we have no idea the unintended consequences this will create for so many years to come. Look, government is the safest to lend your money to in the local currency. We should not create, and the government borrowing rate is the benchmark, more or less, for private sector borrowing. So, in the name of this crisis, government should, I will plead with government to be measured in how it interferes with the workings of the financial market. Other than that, we may be sowing a seed that will not be comfortable to reap the fruit so many years to come. That is what I will say, because the way we understand the workings of the market is both in terms of price discovery, consumption smoothing, and all of that. I am afraid we are reversing 3 decades of progress. Don't forget that where Ghana's financial market is today, including the capital market, it has taken us more than 30 years to gradually build this. And I'll plead with government to be mindful of where we came from, with the price we had to pay in having the financial market the way we have it today. I'm afraid we are going backward.
What could be the consequences if we go down this road and, like Majority Leader H.A. Mensah-Bonsu says, if the middle class, so to speak, is wiped off, if our savings culture is impacted, if our financial system hits rock bottom, then what?
Yes, I agree with the Honorable Majority Leader. This is our savings culture. We are undermining it. If people don't have confidence in the financial system, especially with government instruments, and if you look at the financial market, government plays a very dominant role in terms of securities, trading, and all of that. And therefore, if people don't have confidence in government securities, what happens? If people have excess liquidity and they think that it's risky going to lend to a private sector or someone else, they may want to take their money from the financial system, maybe look outside the country, or maybe buy foreign currency as a proper store of value. As we speak right now, if we don't get an approval for the IMF program in the next couple of months, with the current account deficit widening, it will burn through our international reserves. And we don't have sufficient international reserves, and that will bring pressure on the cedi and further compound our ability to tame inflation, right? So I'm thinking, yes, we also sympathize with government because of the level of crisis, where our debt is and what we need to do to restore debt sustainability. But I will lean towards the Attorney General's position that let's engage broadly with transparency and open hands, right? That will get the buy-in of creditors and all of us. Let's share the data. Let's tell Ghanaians everything. What is the point in hiding the state of affairs? We are in crisis. Of course, the debt we are talking about is not only NPP's debt or Nanado's debt or Ken's debt alone. We look at the public debt in cumulative terms. The public debt is Ghana's debt since it was founded, right? But of course, we can disaggregate it and see who has borrowed more compared to others. But the debt is cumulative. So part of the debt we have to restructure today. Some might have been taken 15 years ago, some 10 years ago, before this government came to power. But once you are in the helm of affairs, you take ultimate responsibility and find a more a sustainable way to addressing it without compromising the integrity of the financial market.
Prof, just hold for us as we wind. Let me bring in Dr. Bamfo. And you heard Prof talk about, so what exactly do you have to hide? You must be very open. It actually reminds me of what I believe it was Oxfam recently said about the last time we went to the IMF, before this one, in the erstwhile administration. Actually, our process was one of the most open in the world.
Yeah.
One of the most open. I think one of the top 5 or so. In fact, the most open one. And I'm asking myself this time, what exactly went different? Dr. Bamfo, so what is your take on that and the legal elements that I brought to bear?
Yeah, thank you very much. I think I will go the route of Prof and also have a disclaimer that I'm not a lawyer, I'm an economist. But first and foremost, I think what is important is to take the Attorney General's position. You know, the Minister of Finance, the government has a responsibility to get us out of this crisis. And to do that, very tough decisions have to be made. However, you know, this is a contract between government and various stakeholders and the public. And it's important that they get the buy-in of the public or the stakeholders or the creditors. And that's the reason why this debt exchange program is voluntary, meaning that they cannot shove it down the throat of the stakeholders. And if you are not going to be able to shove it down the throat, then that means that you need to be able to influence the process by being credible, by being trustworthy, and by being able to present a case where every stakeholder, including the government itself, is taking a portion of the burden. And I think that is going to be critical in the success or lack thereof of this particular program. You know, being able to demonstrate that, look, we are all sharing this burden. You know, it might not be equally, but it has to be equitable. So that should be the focus of government and making sure that, look, this is a success because there's no other way. If we don't get the IMF boss sign-off, you know, we're going to go deeper into the crisis. And I think Prof has articulated that. You know, without, you know, the bailout, we're going to have significant challenges in terms of, you know, our exchange rate. And if our exchange rate further depreciates, we're going to be in a bigger trouble. Then that means that imported inflation is going to skyrocket. Inflation rate is already over 50%. So we have no choice but to get this right. But to get it right, we need to really make sure that we do the right things. And as you guys have said, you know, if previously we're very transparent and it led to a successful program, then we need to do the same. So for me, that is going to be the takeaway that, look, a lot is so dependent on the outcome of this process. getting the sign off of the IMF, not only the 3 billion facility, but the credibility of the IMF being hawkish on us and ensuring that we are more prudent in our expenditures, and are able to turn things around, and then can go back to implementing growth policies that enable the economy grow at a very high rate during the first 3 years prior to COVID-19 hitting us in 2020, of having an average high economic growth rate of about 7%. We've done it before, and I think we can do it again, but it will require government to be very proactive, very open, very transparent, and be able to build trust with all stakeholders so that we can go through this process together as a nation and come out together as a nation if we are successful.
We've spoken so much about this IMF deal that if we're not careful, we may lose sight of the fact that this is not the magic wand that is going to change our economic fortunes. In fact, government does admit, Information Minister, during the time the announcement came that we're going to the IMF, mentioned that this was just to deal with our balance of payments issues. And we know the government has said that it would initiate other programs, measures to help us gain more revenue, which will generally deal with our major economic issues on the general front. We know the government has initiated the gold for oil deal, but do you see that those other measures are coming to play even as we wait for this IMF deal? And what are your general impressions about how, if there are any of these measures coming to play, will impact our general economy?
Hello.
So I think, is it to me or to?
To you, Doc. To you, Doc, first.
All right. Okay. All right. Thanks. All right. So I think it's important that government doesn't, overly depend on the IMF bailout as some, magic wand that is going to turn the economy around. We still have to make some structural changes over time. If you look at the depreciation side of things, one of the things, the bad habits we got into was anytime there was a shortage of forex, we're highly dependent on going to the capital market, euro bonds, get some dollars, and then plug it back into the forex market to meet the excess demand. All right. Now, if we have such arrangements where we can actually trade with our major trading partners, such as Saudi Arabia, and we can actually use resources such as gold in exchange for a key product such as petroleum products, so that we don't have to actually use our limited USD in the market, then that would be helpful. So I think government has to be more creative on a going forward basis so that there's less pressure on forex and our international reserves, so that this balance of payment crisis that we are facing can be averted going forward. So that is just one of such examples. Now, going forward, I know that it's going to be extremely important that government really executes its policy of being more export-oriented. Today we have the Africa Continental Free Trade Arrangement, AFCA, where we are hoping to have more intra-Africa trade. And how we do that is going to be important. Can African economies agree that we're going to use some currency beside the USD so that we don't put undue pressure on us trying to access USD in order to trade amongst ourselves and actually grow our economies? So I think it's going to be important for government to be very creative. Thirdly, when it comes to key projects, as I said, we have a huge infrastructure deficit in our country. There's a need for us to actually bridge that gap. But we need to think through how we go about, building those infrastructures, all right, be it roads, bridges, or what have you. Can we actually have some public sector, private sector partnerships where they can come up with projects that have clear value for money and can pay for itself? All these creative ideas are going to be extremely important, in addition to the IMF bailout, for us to come out of this crisis on a much stronger footing going forward. So I think that those are some of the things that government is thinking about, and they need to be very creative so that we come out stronger than when we went in.
Right. Prof, what about you? Do you see us putting in place these measures that will help us fix the general economy? And how successful do you think these measures will be, if there are any?
All right. Thank you very much. I know I have not seen enough. Ghana's problem is largely governance, which manifests explicitly in economic mismanagement. So we have not seen enough governance reforms which would anchor gains from the IMF program. And the IMF itself is not claiming that their intervention is what Ghana needs totally to come out of this. No, it's an economic program. But the problem is more governance. So, and then you mentioned gold for oil. You know what? Nobody has demonstrated to us with data how this gold for oil would actually lead to a reduction in price. I haven't seen that. You have gold. There's a ready market for gold. And you claim that because you don't have FX, foreign exchange, to give to the BDC, that is why the depreciation of the cedi feeds into export price. But the gold you have has ready market. So you could actually go and sell it and get the dollars to fund your import. You don't want, and Bank of Ghana has been buying gold today as part, not only today, as part of our international reserves management. So you have to demonstrate to me how using the gold in barter exchange is far better off than going to sell the gold on the international market that we all know, and we can monitor the price and see everything, as compared to a barter system that we don't know much about. Of course, I could be wrong, but I haven't seen any demonstration of how the savings from gold oil exchange would inure to the benefit of consumers, as compared to the approach we have used over the years that we all know and we can monitor. Who are the faces behind the gold for oil exchange? Who are they? What is their interest in all of this? How is it monitored? What are the standard measures and all of that? I haven't seen that. So I don't think that we should just jump on this as though it's the gospel that it will change at the end of the day. Somebody should demonstrate to us and convince us, because the point is that we are open to change. If the data is made available and we all can do the assessment and all of that and say that, okay, yes, this compared to this is far better, so we should go this way. Other than that, we will all be here, and one day, this gold for oil, if we are not careful, it will be full of corruption and insider dealing. And the country will
if I get to Prof, the other question is, what are we losing while trading this gold for oil instead of directly exporting and earning some returns?
Pardon, sorry. Can you?
I'm asking if your submission is basically what we are losing in terms of trading the gold for oil instead of exporting and earning some returns. Is that what you're basically trying to figure out?
Yes, that you have a certain amount of gold. There's already a ready market for it. You know the international price. So you could sell the gold and get the foreign exchange.
Right.
Which then can be used to fund our oil import. Now, the problem is scarcity of foreign exchange. And now you are making the case that because of that, the gold that you could sell in order to get the dollars, you rather take the gold physically and go and exchange it for oil. And I'm saying that you have to demonstrate how this will bring extra benefit as compared to going to sell it to get the FX, which you can also use to fund your import. You have to demonstrate that. And you have to demonstrate how this will filter through the pricing mechanism and reflect in a lower price at the export. You have to demonstrate all these things before you press the button for go ahead.
So how many ounces of gold for a certain specific amount of crude?
Oil.
That is something that we need to know. We know that we are told that
the mechanisms. Who are the brokers? Who are the middlemen and the middlewomen? What is their interest? What these channels? What are the transaction costs? How is that related to going to? How is that cheaper? and bring savings compared to going to sell it through the international channel that we all know.
Right.
We need to know all those things. We will be prepared to come along if we are confronted with the data that this is the savings and this is how the savings will trickle down to the export. That's all. We are interested in nation building. Okay?
Right. We have to go, Prof. and Dr. Bamfo, but I can't help myself. I'd just like to know from you, if you can give me a yes or no answer, fine. If you can give a 10-second response, fine. Our sources, and recently was corroborated by Bright Simmons on Twitter, looking at the geopolitics going on with Russia and how it's become a pariah state, so to speak, especially with Western allied countries. If we found out that our oil was coming from Russia, what would that mean? Just give me a straightforward response. I'll start with you, Professor Bokpin.
That would be interesting, but let me just highlight this one. I hope it helps. The global geopolitics itself may be inuring to our benefit on one hand because the West themselves are interested in courting Africa to their side. And therefore, it is possible that the West, the US and the others may bring some pressure to bear on the IMF to give Ghana a program and tamper with the terms a bit in terms of the requirements and all of it. Because we've seen how pressure was brought to bear on the IMF in how quickly they reached the staff level agreement. We've also seen that before, that Ghana was a middle-income country, and yet the World Bank guaranteed one of our Euro bonds, right? Which was contrary to the World Bank principles.
Right.
So the geopolitics is, you can see how our president himself is playing into the global geopolitics in how he highlighted Burkina Faso and Russia issues along our borders, right? Keep that in mind.
Okay. Thank you so much, Professor Bokpin. He's a lecturer at the University of Ghana Business School. Dr. Bamfo, do you have a take on that? If not, we can wrap the conversation.
No, I'm fine. I think that what I would rather, just quickly mention is that I think the rationale for this gold to oil and petroleum products exchange will be the fact that gold, being a commodity product, is more volatile. So that if you can then trade directly, for petroleum products, that is more stable, especially now, then maybe there's a potential of us getting some benefit. But I do agree that it's important that government demonstrates the benefit to the public. Thank you.
Well, I guess the question is always at what value? But that's another discussion we can have.
Right. Yes, and talking about the gold for oil deal, we're going to be having a conversation on that shortly because, there are some stakeholders within the whole industry who believe that they will be rendered jobless if
the licensed gold exporters are crying foul.
If this deal goes as the way it has been, initiated currently, and they are also worried that government is allowing the PMMC to handle this. We'll be back to have that conversation shortly. Do stay.